All right, now we're recording. Guys, what's going on, everybody? My name is Carlos, as you know. Carlos Garcia, founder and CEO of GAR Capital. This is the personal finance, webinar / town hall, where you're just going to ask your questions. If you like the Q&A from Instagram, you're going to love this webinar because this is a very focused webinar where we're just going to talk about personal finance questions. I'm going to answer as best as I can. It's going to be very visual now. You're going to see all the things I'm going to see. And this is all going to be saved on YouTube on our YouTube channel, which is free of charge, obviously. Subscribe, youtube.com/GAR Capital. Take a look at all our videos. Obviously, our Instagram page is at GAR Capital. We're always answering questions when we can get to them, obviously. I answer the questions personally, so if you have any questions, please let me know through the direct message or just ask through the IG questions page or story thing. All right, so let's go ahead and get started. Welcome, everybody. All right, Shafi just asked me. Let's go ahead and start here. Shafi just asked, could you explain why the S&P 500 is so significant to you? All right, so pretty simple, straightforward question. The S&P 500 is the benchmark for all stocks, basically. It's the broad barometer of the market. When someone says the market, how's the market doing? That's basically the question everyone asks. You're either going to get one or two answers. You're going to get someone saying the S&P 500 or the Dow Jones Industrial Average. Keep in mind, the Dow Jones Industrial Average is only 30 stocks, 30 of the bluest blue chips, meaning the top of the companies. And it's wide range from different kind of fields, different kind of sectors. You have healthcare, you have retail, you have tech, biotech, manufacturing, conglomerates, you name it, it's there. You know, basically the S&P is 500 of the biggest stocks in the United States. So that's more of a bigger barometer of the stock market in a sense. That is the benchmark that hedge funds use to compare their performance. So they say, how did you beat the S&P 500? Did you beat the S&P 500? Because why would I invest in your hedge fund if you can't beat the basic S&P 500 with no expenses? So in order to say that, Shafi, I'm going to go ahead and take a look at something with you guys. Let's take a look at the SPY holdings. So you just type in SPY holdings, as you can see here. And pretty simple, you can go to Yahoo Finance. There's tons of resources, guys, online. This is how you look at things. Just Google and you just look around. The internet is at your fingertips. So let's take a look at the top 10 holdings. This is 21.28% of the assets in the SPY. That means if you buy the SPY fund, which is $287.52 right now, if you buy this fund right now, you're going to hold on to these stocks. It's going to be a part of the ETF. It's just stocks together, putting in together, and you'll see this. Apple, Microsoft, Amazon, Facebook, JP Morgan Chase, Berkshire Hathaway, Alphabet, which is Google, Class E shares, Alphabet Class A shares, Johnson & Johnson, ExxonMobil. Now, there's something that stands out here is that most of these are Dow Jones stocks, except for Facebook, except for Amazon, except for Berkshire, except for Google. But Exxon, Johnson & Johnson, JP Morgan, Microsoft, and Apple are part of the Dow Jones Industrial Average. So again, if you are buying the SPY, which I've always said, if you have less than $30,000 in your brokerage account, just put in the SPY, make life simple, because you're going to get diversification here anyways. You're going to get consumer cyclical. You're going to get financial services. You're going to get real estate. You're going to get consumer defensive. You're going to get healthcare. You're going to get technology. You're going to get industrials. Everything there. It's just pure stocks. There's no bonds here. So again, you are buying the broad market. You're getting diversification automatically. That's what you're getting. Very, very simple. Again, guys, don't complicate things. If you have more than 30K, that's when you start putting into specific stocks. The reason I say that is because you don't want to put just $500 in the stock. It's just you're not going to get much. If you put in the S&P 500, it's almost going to create that discipline of having diversification longer term. That's the key here. You want to have longer term diversification. Now, I'm assuming that when you're talking about investing, you're not day trading. Investing is a completely different ballgame. Day trading is completely different. So that's why I say the S&P 500 is absolutely your friend. Just a heads up. What else we got here? Okay, next question. Shafi, what percentage gains would you expect from the S&P? Again, good question. So let's take a look at that. Again, it's going to be a lot more visual. S&P 500 historical returns. So we're going to type that in here, and we're going to go to the yearly chart. So I'm just going to go to the max. So here we go. This is from 19. You know what? I want to get a better chart. Let's see. S&P return calculator. No. historical prices. Let's see if I can get this. Okay. This is pretty much a data dump, so it's not going to work. Let's see. Historical returns. Again, Google is your friend. So let's take a look at 30 years. 30 years of the returns of the S&P 500. Just a heads up. So keep in mind, I'm going to go back from, I was born in 1985. Just a heads up. I'm 32 years old. So I'm going to start here from 1989. 1989 here, gained 27%. 1990, down 6. Up 26%, 1991, up 4%. And you can see so on and so forth. We had a drop in 95 and a big bull run from 95 all the way to 2000 from the dot-com bubble. Fell 10%, fell 13% the next year, fell 23% the next year. After that, we made up that last year 26%, 8%, 9%, 3%, 13%, and then 3%, and then a big drop, almost 40% drop. And then a continuation and continuation. So you can see there's only been 1, 2, 3, 4, 5, 6, 7 down years out of 30 in the S&P. 7 down years. So exactly, you're thinking to yourself, percentage gains per year on average is about 15%. 15%, that's what you're probably much getting. So let's take a look at the year-to-date performance, S&P 500 historical chart. So I'm going to look at this chart with you guys. This is the historical chart of the S&P 500. A lot of ads, sorry. And you can see from 1920, if you, let's just say you started investing in 1990 in a down year. That means you are right now, if you were born in 1990, you're now 28 years old. You would have bought in 1990 the SPY, which is the S&P 500. SPY is just the ETF. The S&P 500 is $573. If you were just bought and held 10 shares, just 10, $573.95, and you're now at 2,816. Yes, there's drops in the middle, guys. Yes, but again, if you stay disciplined long term, it's going to help. That's the key. So let's take a look. Sahia just asking SPYG. SPYG again. SPYG to me is the S&P 500 that I invested. So you can type in SPYG. Again, it's the Spider Growth ETF. Same thing, exactly the same. And you can go by max, longest term. It started back here, back in 2012. How about this? Started at $12.41 at $37.47. Okay, keep in mind, this is 15 years. So let's go to percentage calculator to mess around because I'm lazy and I use percentage calculator for everything. Type in percentage calculator, guys. Again, this is all free. I'm giving you all free information, all free tools that you can use on a daily basis. We started here in 2002, $12.41, right? Right now, the SPYG, if you bought it today, is $37.47. 16 years, you've gained 200%. 16 years, you gained 200%. Now, again, I'm pretty sure if you're a crypto guy, you're saying that's nothing, blah, blah. Listen, we're not trying to be millionaires overnight. Again, we want consistent growth over time, safe growth over time, safe growth. That's the key. We want safe growth, right, guys? Safe growth. This is as safe as you're going to get here. $12.41 SPYG in 2002. We're now in 2000 at 16 years, $37 a share. If we stayed consistent, if you need, I have 11 attendees. Okay, so I guess you guys I can't invite any more people, unfortunately. So 11 people are in. That's fine. I'm going to do a quick live shot. Here, give me a second, guys. I'm going to do this here. Make it simple for everybody. What's up, guys? Just a heads up. Unfortunately, this is live as well. I can't have any more invites on GoToMeeting. So what I'm going to do is just keep this live on both ways. I'm going to do like a simulcast. So if you have any questions, type them here too, and I'll answer them as much as I can. Okay, MGGR. I'd like to know what we'll think about Amazon. What do you think is going to happen? It's increasing very much. Amazon, I do like long term. MGGR. I do like it long term. Again, let's go ahead and take a look at it together. Take a look at Amazon. Again, we're going to take a look at a max chart. Max chart I have here is a 10-year on a monthly chart. If you invested in Amazon back in November of, I want to make sure, 2009, it was $34 a share. $34 a share, just a heads up. That's where we are. So again, if you would have disciplined yourself, held on to the stock since 2008, 2009, right now it's 9 years. $34.68. We are now at $1,905 a share. That's simple, guys. Really is. Just have to stay disciplined over time. Again, stop trying to hit home runs. Stop trying to get rich overnight. This is Get Rich Slowly. There's a good book on that called Get Rich Slowly. And thinking about compounding interest over time, that's the key. That's the key, guys. Compound interest over time, that's what gets you rich. So let's see here. Any other questions? If you want to type away here on GoToMeeting, guys, go right ahead. Instagram, what's going on? This is Carlos, CEO of GAR Capital. Okay, so let's think. I got another question from Mark. Is it smart to open a Roth IRA right now with potential market decline incoming? Absolutely not. I actually think it's a great time to open an IRA. And this is why. You don't have to buy stocks in your Roth IRA. A Roth IRA, I'm going to go ahead and explain about it here. A Roth IRA, just type it in here in Google, obviously. But I'm going to have you guys see the definition as well. Roth IRA. Spelled it wrong. So again, guys, a Roth IRA is basically a retirement account, but it's not just like with your job. It's not a 401k. It's with post-tax dollars, after-tax dollars. So again, let's say you have your paycheck. Let's say you make $1,500 a paycheck, or $500 a paycheck, whatever. $1,500 a paycheck. You want to save X amount. Let's say you want to save 10% of your pay to the Roth IRA. Well, get this. If you look at your paycheck, as always, you'll see $1,500, and then you'll start seeing pre-tax deductions, which is usually your health insurance, usually any kind of 401k retirement plans, or vision insurance, or dental insurance, or whatever, what have you. Roth IRA is going to say after that, after the tax dollars, which is great because when you buy a Roth IRA, now granted, a Roth IRA is not for everybody. Not everyone can get it. The really, really rich people, you have to be under a certain limit in order to get a Roth IRA. So if you're in the middle class, you make less than a certain amount. I'm going to make sure what the amount is. I'm going to make sure what's the, let's see. I know they do change. If you make $120,000 or more in your taxes, $120,000 in gross taxes, you cannot get a Roth IRA. Just a heads up. You cannot get it a Roth IRA. All right, just a heads up. So again, I'm looking at here the Roth contribution limits. You can only give so much too. But what's great is that you could do a catch-up if you're past a certain age. So again, it's a great tax benefit for you because it's after tax dollars. This is something I don't recommend, but if you have a Roth IRA, you can withdraw at any time before retirement without penalty. But you cannot touch the profits. You can only touch the principal. So let's say you put in $10,000 in your Roth IRA over 10 years and you had an emergency. You could pull $5,000 without a penalty. If you put in $10,000 and now your account's 20 because you made 100%, you can take out 10 because that's your principal. Just a heads up. That's what you could do. So next here, so Roth IRAs, yes, I recommend getting them. You can get it through any brokerage. There's some free ones. Make sure don't pay a fee and keep it simple. S&P 500 fund, depending on what you want to invest in. Sahil, Swain, we're not going to answer questions about options in this webinar. This is all about personal finance. So hold that question for another time. I have a Roth 457 account with my employer. Should I keep contributing towards my retirement or should I open a personal Roth IRA? Okay, Sahil, this is what I recommend. I'm going to give you the top, bottom, exact hierarchy. Whatever the employer matches is my first priority. I want free money from my employer. That's the key. If I can get free money from my employer, I'm taking it. So if it's a 401k and they're going to give you dollar per dollar up to 3%, you take that every single time. You max it out as much as they let you max it out. The second step would be my Roth IRA. Yes. Why do I say Roth IRA? Because it's post-tax dollars. It's after-tax dollars. And then you can do the traditional IRA on your own. The reason I say traditional IRA on your own, you can choose your own funds. Sometimes with your employer, you're stuck with funds that maybe you're not interested in. Maybe there's certain stocks that you don't want to be in. You know, if you're in a Vanguard or a Fidelity, maybe there's some mutual funds that, you know, in general, you don't want to be invested in, and they're very limited on what you can get. What I usually see is those retirement planning, and the year is 2030, retirement growth plan 2040, and they'll give you the year plus the day you're going to retire. And again, I'm not against those. The only thing I'm against it is the fees. Again, you can do your own homework and buy your own mutual funds without paying those fees, guys. Again, S&P 500 index fund before $30,000. After that, you can start diversifying. Just a heads up. Keep that in the back of your head. 30K, S&P 500. After that, you can start messing around and start, I don't want to say messing around. You start diversifying a little bit. Okay, let's go back to the Instagram here. Wouldn't it be better to invest in a single stock and get greater returns? Shafi, you say greater returns, but I say greater risk. So be very, very careful. If you put all your money in one stock, what if you did in 2007? You put all your money in Bear Stearns, Lehman Brothers, Countrywide. What happens then? What about Sears? What about Kmart? Done. Again, you have to be diversified because you're going to get hit every time. Be very careful. I want to be diversified, especially with your hard-earned retirement money. If it's retirement, if it's long-term investing, guys, you want to own. Forget speculation. I want to own companies. Change the mentality. I want to own the company. If you're just day trading, man, have fun. Knock it out. We're speculating all day with options. It's not a retirement. It's not an ownership. Ownership of stocks are completely different, guys. Just a heads up. Tax season is around the corner. What Forex trades do we file? If you pull out profit from your Forex account, you will pay taxes because your broker will use your tax ID or a social security number to send you a 1098. It will be in the mail. The government's going to want a piece of that every time. Can you day trade with a self-directed IRA? Yes, I don't recommend it. Okay, back to the GoToMeeting. Would you say Roth IRA is the smartest long-term investment for retirement, if not what instruments? It's not about smart, in my opinion. Let me go back to that. Who was this that said that? Mark? Mark, it's not saying the smartest long-term investment. It's the best vehicle, I would say that, because, again, it's post-tax dollars. And what you're doing is tax deferring. I want the government out of my pockets. So, again, it grows tax deferred. So you're not paying for growth in your portfolio. You have access to your funds, the principal. But when you're 65, 67, 68, you're going to pay taxes on what you currently have. Again, it's completely deferred. That's the best bet. Reyes, I have no debt and $50,000. How can I do to set up good, consistent returns? Good question, Reyes, and congratulations for being really different from most people. They don't have exactly what you have, so congratulations. That's a really great blessing. 50,000. I would put 30,000 in S&P 500 fund, and then I would pick 5 good stocks out of that money. We have a top 10 stock list that we use. Again, more than happy to send it to you through DM if you want. Send it to me, send me a DM, and I'll give you the top 10 stocks we use. Mix them up as you go. You have the diversification. Put that away. Depending on your age, Reyes, I want to know exactly how old you are. This is a good rule of thumb. Take the number 100. This is my rule of 100. Take 100 minus your age. The difference is how much percent you should be in stocks. As you notice, the older you are, the less stocks you should be in because you have less years of making more money because you're older. When you're younger, you could be aggressive as hell. You have all this time in the world to make money when you're young. But when you're older, it's a little different. Again, you have to be more of preserving your wealth than you just attaining it. Just a heads up. Okay, next question. Swain, what is the best assets to fill your 401k, your IRA with, Roth IRA? Your best assets to fill your Roth IRA with, Swain, would be, of course, stocks, in my opinion. Take the 100 rule. Number 100 minus your age. The difference, that number that comes out is the percentage you should be in stocks. The percentage you should be in stocks. The rest of that should be bonds. I want bonds because I want consistent returns. Bonds and dividends. Bonds and dividends is cash flow. Think of cash flow. Cash flow is bonds, dividends, real estate. The rest is capital growth. You're buying. Let's compare it here. Let's make a little bit of an analogy here. Capital growth is that you buy the cow, you feed it, and you sell it. You bought it for $100 and you sold it for $200. That's capital growth. Cash flow is that you buy the cow for $100 and you're selling the milk for $10, and you get milk $10 every time you sell milk, and you still have the cow. You still have $100 in the cow, anyways. I love cash flow. I'm a dividend guy. Just a heads up, I'm a dividend guy, but I love capital growth as well. Again, it's good to have. I have 2 portfolios that I use, one for just pure dividends and one for pure capital growth, just to make sure to invest. I'm gonna go back to the Instagram now. Let's see. Okay, guys, heads up. All questions here are only personal finance questions. If you have trading specific questions, we'll do that another time. But this is going to be personal finance only. Debt, retirement, budgeting, credit cards, whatever. Personal finance is the key here. This is the exact subject. What are things to look for when investing in stocks? M. Salama is asking. My apologies. M. Salama, just a heads up when it comes to best thing to look for stocks. Easiest way I can tell you to look for stocks. Find 5 companies you use every day. Who's your phone company? Where do you put gas? What car do you drive? Where do you usually go eat? That's 4. And then pick place that you shop. Just 5 companies that you know. If you have a phone bill with Verizon, you pump gas at Shell, you wear Old Navy, whatever. Again, those are the easiest way to get into stocks because you know these companies. Make it easier on yourself. I want to make it so it's not difficult. It's not very, very to the point of just challenging and just a big, just unknown to you. Make it simple. All right, next question. Do you claim capital loss on assets on a Roth IRA? No, you can't. No. Negative swing. Carlos, I'm a college finance manager in 2 years. In your experience, what is the best first job to target after college? Mark, the best bet I would definitely go in is a bank. Get in. I don't care if it's customer service. Work your way up. And there's one thing I could tell you, Mark, get some sales training. Sales training is your best friend because that's what is going to get you paid. I understand you're in finance, what have you, but again, sales. You will always go up. And what's funny about sales, the more you master it, the less you have to do it. Because the better you are in sales, the more you're just going to be managing people how to sell. That's my biggest advice. Think of it from somebody who started from the bottom in a bank. Reyes, I own 5 properties. They all have mortgages and are at positive cash flow. It's better to try to pay them off as fast as I can, save cash, invest. No, because that's an asset return. That's asset return. Keep the mortgages, pay those. That's fine. There's a such thing as good debt and stupid debt. Stupid debt is a Macy's credit card. Good debt is mortgages on a cash flow property. I'm okay with that. As long as you're cash flow positive, I'm all for it. I'm all for it because that's leveraging. You can leverage that. Having a Best Buy credit card, that's stupid. I don't want that. Unless you're getting 0% financing and you really need that TV, just pay cash. Keep it simple, guys. Pay cash. But Reyes, your question, awesome. If you have the cash, you have cash flow, start moving that to different vehicles. Maybe REITs, maybe some stocks and what have you. But again, my assumption is that you do pretty well, Reyes. You have some cash saved. Again, I'm a big proponent of emergency funds. I know people say, oh, I don't just want to hold money. Well, you need emergency money just in case so you don't have to dip into your investments and pay taxes on your gains. So again, emergency fund, so key, 3 to 6 months of expenses. Make sure to get that too. Next question, anybody? Moving along. Let's go to Instagram. How do dividends work? Shafi, pretty simple. Dividends are basically a company paying you because you own the stock. That's it. They pay you a paycheck to own the stock. Very easy. Okay, Swain, aren't REITs supposed to crash since interest rates are supposed to rise? That is not true. And what's really cool about certain things about REITs, Swain? The fact is that they get a tax deduction for paying a high dividend because they're reinvesting their money into real estate. Real estate is still a strong sector. Yes, interest rates are rising, but we're actually in a very low interest rate environment, Swain. So again, I don't want you to get the doom and gloom of, oh my God, the world's going to end. Stop trying to top the market. Everyone's trying to call it top and it just keeps going up. Stop being contrarian. Stop doing that. Just because you're contrarian doesn't mean you're smart. People don't do that. You're going to count yourself out of the market. You really are. And it's not the way to go. Okay, so do you have to be a U.S. resident to have Roth IRA? Our IRA is just meant for United States workers, so I'm not sure. How is it taxed with profiting stocks? I don't want to pay high tax. NASDAQ, welcome to the United States. You're going to pay tax one way or another. The best way not to pay tax is reinvest your profits. Should someone pay off debt before investing or at the same time? Pay off debt first. Get aggressive on paying debt first, then get into stocks or investing. Because guys, you're going to pay 30% interest on a Capital One card and you're trying to invest, you're losing every time. Taxes on profit of stocks. Again, it's only taxed if you withdraw the money. In UK, it says spread betting is tax-free. I have no idea about UK. I apologize. No idea. What if the stock performance is bad? What will the dividend paycheck look like? That depends on the stock. It depends on the company. If they're consistent on paying that same dividend yield, then you want to see dividend yield consistency. You can Google that, dividend yield. The question was, what if the stock performs bad? Will the dividend paycheck look like? Basically, the yield goes up because, again, dividend yields are based on the underlying stock price. So you could say dividend history, and let's do Coca-Cola, make it simple. And you can see Coca-Cola year per year, quarter per quarter, has been pretty consistent, even with the stock fluctuations. The only one that it went down a little bit was in 2011. They cut the dividend, but then it came back up. So you said, oh, you're actually seeing the yield rise as it goes up. So again, for the past 5 years, has been pretty consistent when it comes to the dividend history of Coca-Cola. Okay, so let's take a look here. Swain asking another question. What percentage of one's portfolio should be in international assets, Chinese NASDAQ stocks? Okay, so let's do the number of 100. 100 minus your age. Let's say you're 30. That's 70. 70 is your stocks. Take 20% of that, depending on your age. I would say 10%, and put in aggressive stuff like overseas, emerging markets. 10% max. Hell, you know what? I'm going to say 15% max if you really want to get out there. 15%. Okay, next question. Future's looking good. Absolutely, Greg. Can I report my losses and my taxes for my brokerage account? That's a really good question. Talk to an accountant. You can, I believe, if you are a business. Just make sure to confirm that with an accountant. Okay, so should I wait till I pay off my student loans in principal off or pay to refinance them and start paying them back? Get aggressive, Mark, and pay off the student loans, man. Bernie Sanders ain't going to save you. I hate to say that. Everyone thinks that Bernie Sanders or Democrats or whatever, Republicans, is not even a political thing. Student loans are going to have to be paid off, and they're just going to keep going up. Get rid of them. Pay them off as quick as you can. If you have to Uber, if you have to deliver pizzas, man, whatever it takes, get rid of them. Get rid of student loans, man. I'm going to quote Dave Ramsey. Don't have student loans so long they're like a damn pet. That's the last thing you want. I don't want that for you guys. Get rid of them. Pay them off. Forget vacations. Just pay them off. Trust me, you're going to have that thing on your back. You're just going to rip it off, and you're going to have so much freedom because guess what? You're not going to have a payment anymore. And imagine using your student loan payment for investing. Game changer. Game changer. I'm telling you guys, it's a game changer. Any other questions here? Anybody? Oh, my dad insists on waiting to refinance. Okay, if you want to bring down the interest rate, if that is offered to you, hell yes, I'm all for refinancing your student loans. If you're one of those that, refinance my student loans just to put it down to one company, you're just robbing Peter to pay Paul. You're moving just the pieces. Get rid of it. Just pay it. Pay principal. Pay extra, whatever it takes, guys. I'm going to say it one more time. Get rid of the student loans. Don't keep them forever. It's going to hinder you. It's not a help. It's a hindrance. Guess why? Because it's not asset backed. It's not a mortgage. It's just money because you put in a piece of paper, you have a degree. And I hope you graduated if you had student loans. For the love of God, I really hope you did. Unlike me, who dropped out, no degree, and had student loans. And thankfully, I paid them off. Why does the U.S. government to keep 2% inflation and not 0? 0% inflation, you don't want deflation. Deflation is what the Eurozone is doing. And then people are not spending money. Not good. You have to, economics in a sense is the boring science, if people call it the boring science. Why is that? Because it can't be too hot and it can't be too cold. It has to be right in the middle. It has to be Goldilocks, porridge, perfect. So you can't have deflation and now you can't have inflation. Hyperinflation is Venezuela. Deflation was Japan in the 90s, where people weren't spending money at all. So just a heads up, not good. Could you use an IRA account to buy bonds? And Newell is saying, yes, of course you can. Of course you can. Best way to avoid inflation in my savings account. There is no best way to avoid inflation. If you want to avoid inflation, or if you want to hedge against inflation. Hedge meaning to kind of protect yourself. There's a place called TIPS, inflation. Treasury inflated protection securities. Pretty cool stuff. And every time inflation rises, the adjusted principal will be jumped up on the coupon. Pretty cool stuff. Take a look at that. I don't recommend it because the yields are so crappy. So again, just a heads up. Okay, that's Mark. Ray is, how do I start a savings fund for my son who is 10? What is the best route? Pretty simple. In Trust4. You can open a savings account in Trust4, or you can open a UTMA account. I'm going to Google it for you, UTMA account. It's basically the uniform gift to minors. It's basically in their name. You can invest in whatever the hell you want in it. It's free of charge in any credit union or any bank. Depending on the bank, if you do a checking account, don't do that. If you're going to do a brokerage, TD Ameritrade will do it for you, no problem. Next question, property versus stocks. That's a very, very good question. It is really up to you. It is really up to you. My question is, why not have both? Next question, best trading platform with no fees. There's one with no fees. It's called Robinhood. I'm not a big fan of it for day trading, but for investing, I love it. Use them. Okay, what are your thoughts on gold and silver? Gold and silver are a horrendous investment. If you like gold, just buy some gold watches or gold coins. If you really are into it, buy jewelry. But gold bars and historically it's garbage. You know what? I'm actually going to show you gold versus S&P 500. You want to see how great gold is? Let's look at gold versus the S&P 500 ever since 1971. Here's a great chart here. Yeah, tell me what's better here. Yeah, 2011, 4,000 an ounce, and S&P? No. Now we're way above that, and gold has actually fallen. We're actually now in the S&P 500 to the down. Gold is actually to the downside because the dollar has gotten stronger. So this chart is actually old. This is 2011. Look, we're now at all-time highs, and gold is actually falling. So again, forget that chart. Go back to Google. Gold is actually a terrible investment. Okay, how is a person from a lower class family supposed to compete with somebody from a wealthy family that has their assets compounding? Number one question, Swain, and that's a really good question. This is more psychology. Why are you competing? We all have our own journey, guys, our own journey. The great thing about this economy, the great thing about economies, period, is that just because you're making money doesn't mean you're taking away from somebody. Think of accounting or think of the economy as a candle, a lit candle. If I light your candle, does my light go off? It does not. It does not. I just light your candle. I can light your candle. I can light my candle. I can light everyone else's candle with my candle. And that's the economy. Again, when you're spending money on something, you're employing that person. You're employing that company who pays somebody, who pays somebody, who pays somebody, who pays somebody, and it just keeps going in a circle. The beauty of capitalism. That's how it is. So again, don't think of it as competing. Think of it as what are you doing to better yourself and change your legacy? What are you going to give your grandkids when you're older? You're going to give them a legacy or you're going to give them debt? That's your key. That's what your job is now. What you're doing now, today, learning about personal finance, you're actually changing your family tree. You're changing your legacy, saying, you know what, I'm not going to be middle class. Again, not everyone wants Lambos, not everyone wants jets or yachts. I get it. Listen, I'm not even a big car guy. Again, personally, I'm not a big car guy. But again, if you are looking towards changing your family tree, changing your legacy, where you can actually give a trust fund to your family, where your kids can go to college based on the decisions you've made. They don't have to do student loans. They don't have to struggle because of what you're doing. Again, think of it that way instead of competing with wealthy families. The Waltons and the Rockefellers and all those guys have nothing to do with me. And they should have nothing to do with you. Zero to do with you. What you do with your life is your responsibility. What you do with your life is your responsibility. Think of that way. Make the money you got to make. Change your life because it's up to you. Forget the rich people, Forbes or whatever. Again, forget them. They have nothing to do with you. Washington is not here to help you, number one. Washington is not here to help you. The government is not here to save you. Let me get that out of your head. The government is not here to save you. Success is your responsibility. Your responsibility. Your job is to make money and to provide. Not the government's. It's your job. So figure it out. Again, kill something and drag it home. Hunt it. Bring him in. Next question. Sorry for the rant, guys. Any other questions? Going pretty good here. All right. Do you recommend any sites like WeFunder? I don't know what WeFunder is. Let me see what that is. WeFunder. Invest in startups you love. Oh, equity crowdfunding. If you have, I mean, I can't recommend. I don't know them. If you have access to your money, Reyes, I'm for it. Yes, I guess. Listen, don't put all your money into it. Put a couple of bucks in there before you go crazy. That's what I would say. Just take it easy. Go slightly on that one. Okay, Swain has another question. Hypothetically, if you were given $1 million, what's my portfolio look like? Great question. Okay, I'm gonna do my 30 grand S&P because I like to play by the rules. What can I say? $30,000 S&P, right? 30,000. So that's what, 970 grand. Okay, I take my age. I'm 33 in November. 33 years old. So let's say I'm 32 now. I was born in 1985. Actually, no, I'm born in 30. I don't even know my age. I'm 33 now. I'm going to turn 34 this year. Or 30. What year are we in? 2018? I'm turning 33 this year. My apologies. I don't even know what age I am anymore. Turning 33 this year, guys. So I'm 32 now. So if I even take away the age, again, 68. So 68% of my portfolio will be stocks. 68%. And then the rest will be in bonds and cash flow, which is real estate, dividends, what have you. So let's do 68% of the 970,000 into stocks. What am I going to do? My top 10 stocks that I like. I'm definitely going to do some technology. I'm going to do some healthcare, my guys that I like. And of course, the rest of the money at 32% is going to be on cash flow returns of real estate. I'm probably going to buy multi-unit property, leverage that money. Obviously, yes, there's such thing as good debts. Yes, you have to borrow money sometimes in order to buy real estate, mostly all the time, and that's okay. Yes, I'm 33. There you go. Thank you, Steph. I'm 33 years old. I almost forget what age I am. Let's keep it going here. Let's see. I can't remember what age I am. I guess when you're working all the time, you don't even think. 60K, how do I portfolio? Jaidun, you know better. You know that. I've answered this question many times, but I love you anyways. 30K S&P 500 fund, right off the rip, 30K. And the rest of the 30K, break it down into 5 stocks. I can give you top 10 stocks that you can look at, and that you're doing your own homework. 5 stocks, break it down like that. Do you recommend investing in stocks that pay dividends or just look for its stock, Stephanie? Again, it depends on where you are. Again, if you're talking about, I told you the percent rule, the 100 minus your age. 70%, say you're 30. 70% is stocks where you're trying to get capital gains. The rest are dividends and bonds. Again, I'm focused on dividends. So again, just give you a heads up. Say you're 30 years old, 30% of that money that you have should be dividends, cash flow. Cash flow is king. I love cash flow. But again, you're 30 years old, you have so much time ahead of you where you can make some money back. So again, you have your whole life. You still have like 40 years to make some money, or 30 years, whatever. Depends how old you're going to be. But again, just give you that heads up. Use that 100 rule. Remember, I'm going to say it one more time. 100 minus your age. If you're 30 years old, 70% is stocks, 30% is bonds and dividend stocks, because I'm getting consistent cash flow. Keep it that way. Am I holding any Aussie stock, Jaidun? No, I'm not. What's your view on unregulated brokers? Unregulated, anything I don't like. So no. You play with snakes, you're going to get bit, Gonzo. Please heads up. How do you feel about P2P lending, convertible CDs? I like safety, so no. P2P lending, I'm not a fan. I looked into it, not a huge fan. Okay, keep looking down. Mark, do you think the technology behind BTC can outweigh manipulation of racket regulation? If so, retest is that. That's a trading question. I'm going to skip it. This is personal finance. Heads up. Swain, why would anyone put money in a hedge fund when it's been proven that S&P 500 version has beaten them on the long run? Swain, that's a great question. That's a question that Warren Buffett has posed to many hedge funds. But here's the question. Investors like gambling sometimes. I hate to say this word, gambling. They want to swing for the fences. The S&P has never made 60% in a year. Just a heads up. But there's hedge fund managers that have made 60% in a year. Again, people get those big eyes. Oh my God, I want to win big. I want to win big. I want to make those 100% returns. I want to brag. I doubled my money in a year. Everyone thinks that way. So again, that's why hedge funds are still prevalent, because they can swing for the fences. S&P 500 is straight ahead. Straight ahead. If you want to read a good book, Stephanie, I was about to say, good book about investing, really, really good book that's going to kind of give you a guide, personal finance wise, The Millionaire Next Door. Very slow and steady in how to win with money. Again, studies have shown millionaires now in the United States, almost like middle class people, have 2 cars paid off, have a house paid off, fully funded retirement, has no debt. Again, basically in stocks. That's all. Okay. Swain, again, personal finance. We're not going to talk Michael Cummins today. Stephanie, awesome. I'm glad you liked it. Okay, I'm going to get back to Instagram. Okay, let's see. Any good books you recommend to generate multiple streams of income? I do have a book. It's called Multiple Streams of Income, actually. So Google that, Multiple Streams of Income. What do you think is more difficult to become proficient in? Stock or Forex? Schmidt, pick your difficult. There's difficulty in everything. So again, it depends. Don't think of it what's difficult. Think of it what's your passion. What do you feel you're going to be better at? And once you're good at something, you're really into it. Just a heads up. What about the margin? I don't like margin. Stay away. What is your favorite bonds? Oof. I can't say I love favorite bonds, but I have to say there's 2, Microsoft and J&J. They have AAA rated on their bonds. How do you keep track of your dividends for different purposes? Oh, don't worry. You're going to get a dividend. You're going to get a tax bill in the mail. If you're averaging 25% with 30 individual stocks, don't have any 500 index, would you still recommend it first still? Yes, I still recommend S&P 500. Yes, I always will recommend the S&P 500. Back to the go-to meeting. Okay, Mark, currently have money at TD. Should I move it to Ally Bank? I remember you mentioned them earlier. Mark, I'm going to say it easy. Why not both? You can have both. I'm okay with having two. You can have two. You can have three brokerages. Whatever's easier for you. I prefer to have two. I don't want my eggs in one basket. Heaven forbid TD Ameritrade's system goes down. Heaven forbid Ally Bank's system goes down. You don't have to be loyal to a brokerage. Be loyal to the wife and the girlfriend. Don't be loyal to a brokerage. Don't let them tell you otherwise. Preferred stock or common stock? It depends. If you can get preferred stock, great, because you're going to get a better yield. Is it make a big difference? Not really, unless you're Warren Buffett and you got preferred stock from Bank of America, and that guy's a genius. That's different. How about using VPN? Again, VPN, again, Gonzo, that's not a personal finance question. Let's skip that. Keep them coming. Personal finance questions. It is 8:40. You guys are coming hot with the questions. I love it. Any questions, type them away here. Any questions, type them away here. Okay, here we go. Savings account. Where did you post the top 10 stocks? Stephanie, I'll post it in the GAR Capital page again. Give me a couple minutes when we're done here. I'll post it again. You mentioned Ally Savings 2%. No, it's 1.8%, the annual yield. So let's take a look at that. Ally Bank, I think it's 1.8. That's what I have it at. But they just keep going up because interest rates keep going up. 1.8, I think here. Where's the interest rate? 1.8%. Again, not bad. Again, if it's your emergency savings, yes, keep it in an online savings account. Emergency fund, yes. Do you think commissions will be very eventually with JP Morgan? No, I don't think it'll be free forever because, again, you get what you pay for. Listen, if you want to get meat at a dollar store, that's up to you. But I'd like to go to a good grocery store. Yes, it's free, but it tastes like free. That's the thing. I always say that. You get what you pay for, boss. Swain, how does the price of the Dow Jones change since GE is getting kicked out? It's actually up since GE got kicked out. Heads up. It's coming up since they came out. Let's see. Questions on Instagram. Have you diversified your portfolio with wheat stocks? No, EduBoy. I have not bought wheat stocks. I'm not going to buy wheat stocks. Everyone asks me the same question. No wheat stocks. No wheat stocks at all. That's not a personal finance question. Do you currently invest in properties? Yes, I invest in a firm called Fundrise. I'm gonna type it here. Fundrise. It's crowdsourcing ETFs, which I personally like. Oops, I can just type it in here. Fundrise. I'll be buying a multi-unit property pretty soon. I'm looking at property overseas as well in Colombia. It's a whole different story. I'm not going to talk about it here. Obviously, it's in the works. But yes, I do like real estate. I'm still going to learn a little bit. But Fundrise is a great way to diversify your portfolio with real estate. You can start with a little bit of money, and you can get out whenever you can. How much do you make on YT a month? I don't know what YT is. Just a heads up. How does okay, do you think commissions? Okay, next questions. Anybody else? We've got 15 minutes left. Let's hit it hard. Let's hit it hard. Guys, just give you a heads up here. I'm going to do a 401k calculation here. You have an annual salary of 40K, right? You get a 3% bonus every year. Let's just say 3% you make money in your job. Let me give you this heads up here. 10%, you're going to contribute 15% of your money every time in your paycheck. You're 30 years old. You're going to retire at 15. You started with a $1,000 balance at 30 years old. The annual rate of return on the S&P 500, just for argument's sake, is 10%. It's usually 12. The employer matches 10%. Actually, they match dollar for dollar. Most of them do. Dollar for dollar up to 3%. Just to give you a heads up, total employee contributions, $373,000, $74,000 match. You know what you're going to have by the age you retire? $2.7 million. $2.7 million. I'm going to repeat that again. You contribute 15% of your money. You make $40,000 a year. You make 3% annual salary increase, which is a basic here. You start at 30 years old. You retire at 65. That's 35 years of working. Annual rate of return on S&P 500 fund is 10%, and I'm moving from the low side. The employee match is 100% dollar for dollar up to 3%. And you work at the same place. You know how much you're going to make by the end of everything? You're going to have $2.7 million in your brokerage account. $2.7 million in your 401k. I just did the math. Very simple. Again, it's consistency with plan. Again, plan, consistency, discipline equals results. Period. I don't care if you're trying to lose weight. I don't care if you're trying to save money. I don't care if you're trying to fix your marriage. Consistency over long periods of time with a plan equals success. Without that, forget it. You're wasting your time because it's all here. If you really don't care, forget it. You're not going to be rich. Okay, I've got 2.7. How much is that? Good question. Depends on you. Okay, wouldn't it be better to take that? Would you put in a 401k invested in real estate? No, Stephanie. I want tax-free growth. Tax-free growth. This is the key. This is grown tax-free. Beautiful, tax-free. So when you start pulling out money, when you start pulling out $1,000 a month, guess what you're only paying on taxes on? That $1,000. Beautiful. Next question. What percent should I put in my 401k? The match is 1-for-1. Max, Garrett, max it out. It's a real estate. Yes, I just talked about it, G bro. Love. Am I rich? I'm rich in love and giving. Anyone else? Any other questions? And rich is a very, very subjective question. Rich to you, hell, I'm rich in African nations. Hell, I'm rich in South American countries. What's rich? Rich to you and rich to me is everyone else. That's different. It's a very subjective question, guys. Any other questions? Carlos, isn't it hard to look at a monthly of Standard & Poor's and not think of some kind of major pullback coming? Again, Mark, this is the contrarian people talking. Do you think it's going to pull back? Yes, there's going to be a pullback. But let me ask you this question. Do you ever shop on Black Friday? Or do you wait for the TVs to actually go up in price? Think of stocks, again, guys, as something that you can buy and own. Forget investing. Own it. Do you want to buy a TV when it says, hey, this TV is up 30% from last week? Do you want to buy it now? No, I don't. I want to have it when it's 30% off. Am I right? So why don't you just do that? Think of it as a pullback, as an opportunity to buy more. Instead of saying, oh my God, it's going to pull back. You're not going to use the money right now anyway, so what difference does it make? Question here from Successful Stocks. With my annual pay per month, I don't get paid anything on YouTube. Nothing. I don't get anything on YouTube. Mr. Hernandez, I just talked about gold, and no, I think gold is a horrendous investment. Horrendous. And I mean that. Horrendous investment. Natalie, Carlos, how much capital do you start in options? Again, it really depends on you. Again, recommendation to me is 5,000. But again, that's money that you have to be ready to lose. That's not a personal finance question. We'll do that another day. This is personal finance only. Heads up, personal finance questions only, guys. Okay, next question. We got about 13 minutes left. This is fun. Are you still long Bitcoin? That's not a personal finance question, but yes, I still own it. And I'm still going to own it. That has not changed. So I'm going to give you a quick quote, guys. The difference between possible and impossible lies in the person's determination. Think about that for a second. The difference between impossible and possible lies in the person's determination. Are all Dow 30 companies represented in the S&P? Yes. Worst investment. Worst investment is wasting time and debt. It's the stupidest investment. When you said invest in 30 S&P 500, you recommend put little by little so you can average out. So I would buy 10K, 10K, 10K. That's how I would do it, Jaidun. So you can average out and get a good price. Just don't buy 30K in one shot. And if you're going to get charged $6 in fees, I'm pretty sure you're not going to worry about that. The worst investment is wasting your time. What do you think about apps like Stash? I like Stash, Stephanie. Stash, was it Robinhood is good. They're all fine. I have no problem with it. If you have access to investing, if it's going to help you invest, guys, if it's going to help you save money, I'm all for it. You want to save your pennies or you want to round up and I want to buy it. If you're saving money, I'm for it. I love it. I'm all for the apps. I'm all for it. As long as it's safe, as long as you're regulated, I'm all for it. Safe meaning that your money's going to be taken away. What about the Russell 2000? Those are small caps. Small caps are a completely different story. They're okay, but again, I still like the S&P 500. Mark, should I get a secured credit card and start building credit? If you want to start building credit, yes. If you haven't started building credit, pretty simple. Go to a gas station, get a Chevron card. They'll give you $300 limit. Go to Macy's, but don't use it. This is what I want you to do. Every time you plan to use it, I want you to have a $100 bill in your hand, in your wallet, the day you use it. I want you to swipe the card for gas or buy something, and then within 2 weeks to pay that difference off. Pay that off. I don't want you living on credit. Because guys, I promise you, stupid debt. There's stupid debt, and then there's good debt. Stupid debt is, shopping on credit. That's dumb. Good credit, good debt is leveraging for property, assets, completely different. If you got 100K, would you buy stocks or put into property? Again, I have 100K, 30,000 in S&P. I take my age, 32, take 100 minus your age, put the difference in bonds or real estate, and the rest into stocks. Thoughts on mutual funds? I love them. Yes, Stephanie, I know I'm 33. I'm just saying for purposes of this channel here. And I'm not 33 yet. I'm 33 November. 33 November 13th. That's my birthday. I'm not 33 yet. Okay, so again, 100 minus your age. I'm 32, by the way, 32 years old. Okay, just heads up. Then you put 68 of that into the S&P 500, and then you put the rest into cash flow properties or ETFs or cash flow dividends. I'm all for it. I do think CNBC and other news are just entertainment and irrelevant. Is that a question to me, or is it just a statement? No shit, that's my husband's birthday. All right, great. Congratulations, Stephanie. He's a good man. Do you think? No, Rick. I do think CNBC is very, very enlightening, and it's a really good way to get information. Yes, I am old. Absolutely. I'm old, but I'm young at heart. Thoughts on Schwab's commission-free ETFs and mutual funds? I absolutely love it, Swain. Love it. I love commission-free ETFs because more money in my pocket. I have commission ETFs with TD Ameritrade, and I absolutely love them. Take a look at them. They're great ones out there. Great stuff, JR Capital. Cheers. Thank you. It's water, I promise. It's just water. We've got 9 minutes left on this town hall. I'm going to put this up on YouTube, guys, so don't worry. No worries. Questions. What's the difference between an ETF and a mutual fund? Good question. ETF is an exchange-traded fund, usually an index. Or a basket of a sector. Mutual fund is a mutual fund manager that they handle it and they sell stocks based on that. ETF there is no manager. It's just basically a basket of stocks based on a certain sector or based on an index. Mutual fund actually has a manager. So think of it as a hedge fund manager or mutual fund manager, and they charge a fee. ETFs have smaller fees. Mutual funds have bigger fees, but mutual funds, they'll actually tweak it a little more. ETF just keeps it the freaking same. Best dividend stocks, including Coca-Cola. Pretty simple. I'm going to give you a great website here. It's called Dividend Channel, and they have a top 10 list. So you can type in our top ranked dividend stocks. Take a look at them. They have some really good ones. Just a heads up. Again, personally, I like Cisco, TSCO. I love AT&T. I love Iron Mountain. I love Home Depot. I love Apple. Apple doesn't have really great dividend. I do love CenturyLink. I own CenturyLink too. So again, there's tons. What would you do better at the beginning now that you have experience? What would I do better now that I have experience? Boy, do I wish I did not party as much in my younger years. I would have saved all that money, started a business at 18 instead of starting my business. I started my business in 2014. That's 4 years ago. It's 28 when I started. So yes, I wish I would have started sooner. Best broker for Forex is FX Choice. We put that post on earlier. So take a look at that. FX Choice from our Forex department. Questions as we go along. Mutual funds, is there a minimum? Also, do you own shares of them when you buy them? Yes, there's a minimum. Depends on the mutual fund. Do you own shares of them? Yes, you own shares of that mutual fund. Which Forex broker do you recommend? FX Choice, the one we recommend. FX Choice. Any other questions, guys? We got 5 minutes left. 5 minutes. Pretty good stuff. It's been really, really fun. I hope everyone has enjoyed this session. I actually love it. This has been absolutely fun. We should do this more often. Wouldn't you agree? Type in a heart or heart me. Just press the little like button a couple times. I'd appreciate that. Just to show that you love this stuff. I'm glad you do. Okay, heart. Ray is typing a heart. Thank you for typing a heart. Anyone typing a heart? Thank you. Everyone has a heart. Everyone else on YouTube, thank you. All right, so we got 5 minutes left. Is there any other questions? Any other questions here? Thank you, Carl. Appreciate your help. You're welcome. Diversified Vanguard and S&P 500, good move. Yes, Jaidoon, I do like that. Favorite book for investing? So many good ones, man. Best bet, just Amazon it. I can't go through a ton of them right now. I just want to answer as many questions as I can. So Amazon, personal finance, ton of good lists. My man, NASDAQ Black, thank you. This has been the best. Thank you. Can I borrow your Lamborghini for a day? I don't have a Lamborghini, Jason Castro. I have a really boring Lexus, and it's very comfortable, and I drive the speed limit. Yes, I'm a slow driver. Sue me. Sue me. I don't drive fast. If you want to talk about fast driving, talk to my guys at the Forex department, Nick and Kevin. They're the speed racers. They're the ones that like to drive fast, not me. Any other questions? Tell my friends to move money out of saving. Why would you tell your friends to move out of saving? Emergency savings are a good thing. Absolutely. Emergency savings are going to save you. Why is emergency savings good? I'm going to explain that real quick. Emergency savings account provides one thing, security. So when bad things happen, life happens, bad things happen, it becomes an inconvenience, not an emergency. Think about it. You ever had a flat tire and maybe your tires are expensive? Those are like $400, $300, $200. Without an emergency fund, guess what you're going to do? You're going to be swiping a credit card. Not good. If you use cash, it becomes an inconvenience. You're like, whatever, no biggie. That's the best way to think of it. I want you in your financial journey to look at inconveniences, bad things in life happen, but make them as inconveniences, not, oh my God, life or death situations. Just a heads up. Do you think the market is, again, no market questions, personal finance questions only. Not answering it. Garrett, I saw your question about Scotch. I'm not answering it because this is a personal finance question. Personal finance only. Liquidity. What about it? What about liquidity? Again, Fernando, we're not doing a market class. We're doing personal finance only. Come to San Jose for a tour. Sure, one day I will. 3 minutes left. Guys, please ask me a question in regard to personal finance. Don't ask me about stocks. We're not talking about personal stocks, individual stocks. I'm not going to analyze stocks overnight here. How much you charge to manage wealth? We are not managing any money at this moment. We need to expand our staff. Any other questions? If you like this stuff, obviously, guys, if you like these videos, give me some feedback. Send me a DM, this direct message, how much you like these kind of videos. I'll do more if I can. If you do like it, I'm going to have to plan it ahead of time. I know this was kind of a last minute thing, but again, I'm going to plan a little more so you guys can have exactly what you need, ask all the questions you need. I do the Q&As every day, guys, on the YouTube, whatever stories thing. So I'm going to do that for you guys. Ask any questions that you like any day of the week. How does one know when you're financially stable? Reyes, this is a really good question. I'm going to give you this answer. How long can you last without a paycheck? That's how I know how financially stable you are. How long can you go without a paycheck? If you didn't get paid for the next 3 months, how long can you survive? You didn't get a paycheck for 3 months. Could you survive? That's the answer right there. Does any of my account can handle the investment taxes stuff? I don't understand. What percentage of your salary to save? Oh, that's a really good question. Honestly, if it was up to me, half. Do you think real estate's better to invest in stocks for a young guy? Again, take the 100 minus your age. That's the number you should be in stocks. The number you should be in stocks. The rest should be in real estate and dividends. Okay, guys, 2 minutes left. Any other questions? Any other questions? We're gonna wrap it up here. Okay, guys, I'm gonna end this on Instagram Live. Thank you guys so much. Appreciate you guys. I'll put this on YouTube. Have a great rest of your night. Goodbye, Instagram. I'm still on here on what is this? GoToMeeting. I'm gonna have to expand GoToMeeting to have more people on because I can only get 10, 11 people max, which sucks. Reyes, this was a great webcast. After 10% review on Facebook. Hey, thank you so much, guys. It is now 8:59. We were been on for 1 full hour. How awesome was this? Guys, my name is Carlos Garcia again, founder and CEO of GAR Capital. Thank you so much for your questions. I really do appreciate it. Have a great rest of your evening, and we'll catch you soon. You guys are the best. Thanks again, guys.